Enterprise Finance Daily Banking, Risk, and Corporate Market Insights. Daily AI-powered insights for finance professionals, investors, and enterprise decision-makers. Disclaimer: this report is for informational purposes only and not financial, legal, or medical advice. All commentary reflects current news and trends, not official guidance. Always consult professional advisors before making decisions, and remember that news and analysis should not be treated as advice. The following deep dive covers trending developments as of Wednesday, July 1st, 2026, forward-looking to the day's market insights. With a positive, futurist perspective, we explore 5 key sectors: corporate finance and banking, fintech and regtech, risk management and insurance, investment and capital markets, and AI and data analytics in finance, each marked by a headline topic with an eye-catching tagline and nuanced analysis. Let's venture into the financial frontier together, bringing clarity to complex markets and a hopeful, human-centered view of the road ahead. Corporate finance and banking. Merger mania accelerates. Resilient banks chase growth in new financial frontier. Topic overview. In the arena of corporate finance and banking, a wave of mergers, acquisitions, and strategic partnerships is reshaping the industry. Major banks and corporations are seizing opportunities to expand and innovate, leveraging robust balance sheets to pursue transformative deals. Record-high capital reserves at banks, with over 99% of U.S. banks now well-capitalized according to recent regulatory reports, have emboldened financial giants to make bold moves. System liquidity is soaring. U.S. bank deposits hit a historic $19.5 trillion, providing the raw fuel for this merger momentum. Banks are enjoying strong profits even in a high-interest rate environment, with large U.S. banks posting about 14% return on equity in early 2026. This financial strength, coupled with pressure to keep up with technological innovation and emerging competitors, has set the stage for an M&A boom. Major players are on the offensive, using strategic deals as rocket fuel for growth, a trend that has industry watchers dubbing it a merger mania, reminiscent of past bull market surges. CIPRA. The M&A frenzy spans across regions and industries, signaling corporate confidence in the future despite economic headwinds. In the United States, high-profile acquisitions and spin-offs are making headlines. For instance, Comcast's planned spin-off of NBCUniversal is long overdue, as analysts anticipate it unlocking significant value. Meanwhile, media titans have joined the fray, with the U.S. Justice Department reportedly approving a historic merger between Paramount, with partner Skydance, and Warner Bros. Discovery, marking one of the largest entertainment deals in decades. Financial firms aren't far behind, eyeing targets in fintech and AI to bolster their digital capabilities. Investment bank executives speak of an arms race in deal-making, acquiring tech startups, wealth management boutiques, and other banks to broaden their reach and modernize services for the future. From banking giants forging alliances to global corporations consolidating operations, deal-making is back on the agenda, fueled by ample cash and a strategic imperative to innovate. This surge of activity reflects not just opportunism, but a forward-looking vision. Companies are investing now to conquer new markets, akin to explorers staking out new territories in space. CNBC. However, the path to mega mergers isn't without hurdles, and caution is in the air even as deal-making enthusiasm builds. Regulators worldwide are scrutinizing big bank combinations for risks to competition and stability. In Europe, for example, Italy's UniCredit Bank paused its pursuit of Germany's Commerzbank as CEO Andrea Orcel confronted stiff political and regulatory resistance. The 2-year saga saw Commerzbank's stock nearly double since 2024 and regulatory approvals for a stake up to 29.9% granted by the ECB. Yet uncertainties and stakeholder pushback have delayed a full takeover decision. This showcases the delicate balance between ambition and oversight. Even as banks have the capital to expand, regulators and governments ensure such expansions are prudent. The corporate finance landscape today is resilient but watchful. The Federal Reserve's latest supervision and regulation report underscores that while banks remain fundamentally strong, examiners are zeroing in on certain vulnerabilities. Exposures to private credit markets and concentrated commercial real estate loans are under increased scrutiny amid higher rates. Banks are adapting by beefing up risk controls even as they chase new deals, signaling a matured approach: resilience first, then expansion. Corporate finance leaders are hopeful that disciplined growth and thoughtful mergers can propel the industry into a new chapter of prosperity, much like astronauts preparing meticulously for a successful mission to the stars. ACM. Chitsipra. Subtopic: Strategic Synergies and Market Sentiment. In this M&A renaissance, investor sentiment is largely supportive, as markets often cheer the efficiency and innovation promised by strategic combinations. Successful deals can create value if executed well, unlocking new revenue streams, cost synergies, and technological advancements for the companies involved. Analysts point out that mergers in sectors like technology and banking can accelerate the adoption of new tools, like AI-driven services, benefiting customers and shareholders alike. However, maintaining a people-centric focus is crucial. Leaders emphasize that merging corporate cultures and safeguarding jobs are as important as balance sheet outcomes. Regulators remain cautious about too-big-to-fail risks, requiring firms to ensure that consolidation doesn't come at the expense of competition or financial stability. Yet many see this merger momentum as reflective of economic optimism, suggesting companies are confident in future growth rather than hunkering down. The confluence of healthy bank finances and future-focused investments indicates that corporate finance and banking are entering a promising new orbit, poised for expansion while addressing challenges responsibly. Fintech and RegTech. Crypto rules showdown. Lawmakers race to rein in digital finance. Topic overview. Fintech and RegTech are at a crossroads as governments worldwide accelerate efforts to regulate the crypto and fintech boom. In the United States, a pivotal legislative push is dominating headlines. Congress is in the late stages of debating the Crypto Clarity Act, a comprehensive bill aimed at establishing clear rules for digital asset markets. After years of regulatory uncertainty, lawmakers are scrambling to finalize this landmark framework before the August recess, spurred by rising political pressure and high-profile industry failures. At stake is how cryptocurrencies and decentralized finance will operate in the world's largest economy. At the same time, the U.S. has already passed the Genius Act, a new stablecoin law, requiring issuers to hold 100% reserves in cash or treasuries and submit to regular audits. This law forces major stablecoin providers like Tether to retool operations to meet strict U.S. standards, while benefiting compliance-ready players like Circle's USDC stablecoin. The regulatory tide is rising in Washington, from proposals clarifying which agencies oversee crypto trading to debates on how to tax or supervise decentralized finance. Capitol Hill is abuzz with attempts to tame a financial frontier that's often likened to the Wild West of the digital age. Coin Edition. The Central Bulletin. +1. The Central Bulletin. Global regulators are equally active, reshaping the rules of fintech innovation from London to Singapore. Europe's Markets in Crypto Assets (MiCA) framework, a sweeping EU-wide crypto regulation, has officially kicked an asterisk, and already it's prompting major shifts. The world's largest crypto exchange, Binance, facing the end of MiCA's grace period without a full EU license, has begun limiting or winding down some services across Europe. This is the dawn of a new compliance era for crypto firms, forcing them to either meet higher standards or exit major markets. In Asia, countries like Thailand are advancing their own digital currency rules. The Bank of Thailand is preparing to regulate a ThaiBaht stablecoin in hopes of boosting payment efficiency and linking to green finance initiatives. Singapore, a major fintech hub, continues carefully policing crypto players, recently flagging a DeFi platform, Hyperliquid, in an investor alert list amid concerns over licensing perceptions. Across the globe, a patchwork of new regulations is emerging, KYC/AML obligations, capital requirements, and licensing for fintech firms are being tightened to prevent fraud and protect consumers. This coordinated regulatory momentum aims to bring order and trust to fintech and crypto markets, in turn attracting more mainstream adoption and long-term investment. Coin Edition. The tug-of-war between innovation and oversight is intense, but the tone is increasingly optimistic that clear rules will unlock growth rather than stifle it. Many industry leaders welcome regulatory clarity as a foundation for maturity. They argue that transparent guidelines can weed out bad actors and encourage institutional participation in fintech. Much like establishing air traffic control to safely guide the many new spacecraft of digital finance. Fintech companies and banks alike are devoting resources to compliance technology, RegTech, automating tasks like AI-driven KYC, Know Your Customer, and risk management to meet higher regulatory expectations. The synergy of technology and regulation is evident. Advanced analytics help flag fraud and ensure data privacy, while regulatory sandboxes allow safe experimentation. In this dynamic environment, the race is on to shape the future of digital finance, with policymakers, banks, and startups negotiating the rules of a new financial orbit. The question remains, can regulation strike the balance between safeguarding consumers and fostering innovation? Subtopic: Global regulatory convergence. Around the world, financial regulators are coalescing on stricter but harmonized standards, reflecting a shared recognition that an interconnected digital finance system needs coordinated oversight. The European Union's MiCA rulebook is not only prompting adjustments by crypto exchanges, but also setting a template for other regions to consider comprehensive crypto laws. The UK is aligning with global peers by crafting its own post-Brexit fintech rules, focusing on stablecoins and digital pound possibilities. In Asia, proactive regulation is likewise taking root, with economies like Singapore and Hong Kong balancing fintech growth with strict licensing and investor safeguards. Meanwhile, international bodies like the Financial Stability Board call for global standards on crypto to prevent regulatory arbitrage. This convergence is forging a clearer path for fintech globally, giving mainstream institutions more confidence to explore blockchain, digital assets, and RegTech solutions with reduced fear of a regulatory vacuum. By establishing common ground rules, authorities aim to create a safer, more predictable environment, one where innovative financial technology can thrive responsibly and where consumers and investors are better protected in this brave new digital world. Risk management and insurance. Confronting a new era of mega risks, insurance industry tackles $424 billion protection gap. Topic overview. The risk management and insurance sector is grappling with an unprecedented convergence of global threats, from catastrophic weather to cyber warfare and a widening gap in protection. Insured losses from natural disasters have stayed above $100 billion for 6 straight years, with 2025 alone seeing $107 billion in insured catastrophe losses, a slight drop from 2024's record, but still extraordinary. This relentless drumbeat of hurricanes, wildfires, floods, and freak storms has redrawn the risk landscape, establishing a new normal of elevated disaster costs. Insurers and reinsurers caution that even years without a mega hurricane can incur massive damages from so-called secondary perils like wildfires and severe storms. Climate change is now a core financial risk. For example, a single wildfire near Los Angeles early in 2025 caused a staggering $40 billion in insured losses, the largest wildfire insurance loss in history. These figures underscore a structural shift. Extreme weather and other catastrophes now pose chronic, compounding risks, challenging insurers to innovate in pricing and coverage to keep policies affordable and available in vulnerable regions. Insurance Business Mag. At the same time, the insurance industry faces intensifying complexity beyond weather-related disasters. A sweeping risk survey by the Insurance Information Institute, III, and Munich Re reveals that cyber threats, economic volatility, and emerging technologies like AI are collectively heightening risk and exposing massive protection gaps. in coverage. The study, RiskSkin 2026, highlights how multiple threats are now interlinked. Economic stress can amplify the impact of cyber attacks or catastrophe losses, testing insurer resilience. Notably, they estimate a staggering $424 billion global shortfall in catastrophe insurance coverage. This gap between total economic losses from disasters and the portion insured has grown as populations and assets concentrate in high-risk areas and disasters intensify. In other words, hundreds of billions in losses from floods, storms, and other crises remain uninsured, leaving communities and economies dangerously exposed. Insurers are alarmed that such protection gaps persist even as awareness of risks rises, especially in developing and coastal regions where insurance penetration is low. Cyber insurance, too, lags behind the threat. Intangible dangers like data breaches, network outages, or AI-driven fraud loom large, but coverage terms often haven't caught up. This interplay of hazards, natural, technological, geopolitical, and financial, means risk managers must be more forward-looking and dynamic than ever before, as if navigating a field of asteroids where threats can come from any direction. Insurance Business Mag. +1. Insurance Business Mag. The good news is that the industry is responding with innovation and resilience, seeking to build shields for this new era of mega risks. Insurance is moving from a back-office expense to a strategic priority for enterprises, with risk awareness now front and center in boardrooms around the world. Insurers are embracing advanced analytics and AI to improve risk modeling, aiming to anticipate complex scenarios and price policies more precisely. Alternative risk transfer is booming. The catastrophe bond and insurance-linked securities, ILS, market is thriving as investors pour capital into reinsurance vehicles, providing crucial backup funds for disasters. For example, Florida's state-run insurer secured nearly $2.82 billion in reinsurance and cat bonds for 2026, benefiting from a roughly 30% year-on-year decline in reinsurance pricing, a reprieve after consecutive years of skyrocketing rates. Parametric insurance solutions are expanding as well, paying out automatically when parameters like wind speed or quake magnitude are triggered, which helps cover previously uninsurable risks. Industry experts call for collaborative action among insurers, governments, and tech firms to close protection gaps. They emphasize that insurance plays a critical role in community resilience. If coverage can keep pace with evolving threats, it can enable quicker recoveries after disasters and more confident investment in vulnerable regions. In the face of mounting challenges, risk professionals are hopeful that with innovation, partnerships, and sound regulation, the world can conquer this new risk frontier, ensuring that humanity's grand ambitions, even reaching for the stars, remain safeguarded against the unexpected. Insurance Business Mag. Artemis. Insurance Business Mag. Subtopic: Tech-driven risk solutions. Advanced technologies are becoming key weapons in the risk manager's arsenal as the industry adapts to a more perilous environment. Artificial intelligence and machine learning models now analyze vast datasets, from climate patterns to cyber threat intelligence, allowing insurers to predict events and refine pricing more accurately than ever before. Insurtech startups are harnessing AI-driven platforms to automate claims processing and identify emerging risks in real time, promising faster payouts and proactive risk mitigation. Drones and satellite imagery are increasingly deployed to assess disaster zones quickly and estimate damages, aiding recovery efforts and feeding data into better models, a synergy of Earth observation tech that even parallels space exploration techniques. Blockchain-based smart contracts are enabling parametric insurance, which can automatically trigger payouts for policyholders when specific conditions, like a quake's magnitude or rainfall level, are met, bypassing lengthy claims processes. On the cybersecurity front, insurers are crafting new policies to cover AI-related risks and educating businesses on preventing digital breaches. In the face of compounding threats, the use of technology is offering hope. It empowers insurers and communities to see risks coming and respond faster. By blending human expertise with cutting-edge tools, Much like astronauts relying on advanced navigation systems in space, the risk industry is charting a course to a safer, more resilient future. Investment and capital markets. Stocks soar on AI hype. Small caps and SpaceX fuel record market rally. Topic overview. Investment and capital markets are reveling in a breathtaking rally as investors seize opportunities amid an AI-fueled boom. U.S. stocks have surged in the first half of 2026, with an especially remarkable run in small-cap shares. The Russell 2000 index of smaller companies has jumped over 21% year-to-date, pacing for its best first half since 1991. Once laggards, these nimble firms are catching up to their larger peers, propelled by both attractive valuations and improving fundamentals. Analysts describe it as more than a cyclical bounce. This time, the rally is driven by the rapid build-out of artificial intelligence infrastructure, which is benefiting an entire ecosystem of component makers and service providers beyond the big tech titans. For instance, dozens of small semiconductor equipment stocks have skyrocketed in value, some up over 400% this year, as they supply crucial parts to meet insatiable demand for AI chips. The excitement around AI technology has become a rising tide lifting many boats. Even smaller companies are now enjoying what one portfolio manager called a catch-up story, combining low starting valuations with newfound growth drivers. In essence, investors see AI as a transformative force akin to a rocket booster for the economy, and they are placing bets on which companies will thrive in this new era. CNBC. CNBC. +1. Adding to the market euphoria, huge inflows of capital are chasing high-profile opportunities, such as the newly minted SpaceX stock. The long-awaited SpaceX initial public offering, IPO, earlier in June not only marked a milestone in the new space economy, but also coincided with a surge of investor money into equities. SpaceX's market debut was met with a frenzy. Early post-IPO trading was so heated that S&P 500 index managers moved quickly to address the stock's eventual inclusion. In the week of the listing, a staggering $83 billion poured into U.S. equities, reflecting how SpaceX's success ignited market optimism and a broad risk-on attitude among investors. This flood of capital primarily benefited technology and innovation-oriented funds, fueling the tech rally. Other investment darlings like AI-focused firms soared, adding to the momentum. This confluence of factors, a star-studded IPO and robust tech trends, has turned the latter part of the pandemic-era caution on its head, replacing it with risk appetite not seen in years. The stock market's gravity-defying run has some comparing it to a launch into orbit. Each new development in AI or a stellar corporate success story, like SpaceX, seems to propel stocks to new heights. CNBC. Wealth management. Yet, veteran market watchers caution that not all is as weightless as it appears, urging investors to keep their seatbelts fastened. Rising interest rates remain a looming test. The Federal Reserve has thus far paused further hikes after a rapid series of increases totaling 500 basis points from 2022 to 2023. But whether inflation is fully tamed is still uncertain. The Fed's next meeting is set for July, and futures markets put roughly a 1 in 3 chance on another rate bump. Higher rates historically pose challenges for small companies as their borrowing costs climb and refinancing becomes more expensive. Some analysts warn that if rates resume rising, it could clip the wings of the small-cap rally, especially in the final quarter when many firms face refinancing hurdles. Nonetheless, a growing consensus believes the bulk of tightening is over. Peak inflation and peak rates may be within sight. If the economic stars align, steady inflation, moderate rates, continued earnings growth, many investors are optimistic the diverse rally will broaden further. Global capital markets are thus walking a tightrope between enthusiasm for the future, especially in game-changing sectors like AI and space, and prudent caution about macroeconomic conditions. For now, the bull party continues, buoyed by dreams as boundless as the cosmos, yet with an eye on the horizon for any turbulence. CNBC. Subtopic: Interest rates and market trajectory. The interplay between central bank policy and market performance is front of mind for investors, adding a dose of realism to the otherwise exuberant rally. The Federal Reserve's stance on interest rates is a critical variable. With persistent inflation concerns, some officials even suggest that runaway demand for AI and technology could keep prices elevated, potentially requiring further rate hikes. The unusual scenario of AI-driven inflation, as surging tech investment drives up costs, has policymakers debating whether the tech boom might ironically force rates higher. Fed officials are split on how AI affects the economy. Cleveland Fed President Beth Hammack points to insatiable corporate AI spending as an inflationary force, while Fed Chair Kevin Warsh counters that AI's productivity gains should ultimately be disinflationary. Markets are parsing these signals carefully, knowing that the tail end of the global tightening cycle is delicate. Yet, many in the investment community remain hopeful that central banks can achieve a soft landing, reining in inflation without triggering a recession, which would validate current stock valuations. If interest rates stabilize or start to ease, it could serve as additional fuel for the bull market, enabling companies, especially smaller ones, to borrow and invest in growth once more. Conversely, if inflation surprises to the upside and central banks turn more hawkish again, markets may face a reality check. For now, as we step into the second half of 2026, investors are cautiously optimistic that the monetary policy starship has reached apogee and might soon descend to a calmer trajectory. AI and data analytics in finance, tech revolution on Wall Street, AI and quantum computing redefine financial services. Topic overview. An unprecedented technological revolution is sweeping through finance as artificial intelligence, AI, and advanced data analytics become central to strategy across banks, trading floors, and insurance firms. Global financial institutions are rapidly integrating AI into their operations, unveiling partnerships and talent hires to harness the power of machine learning. For instance, HSBC has partnered with Google Cloud to infuse AI across its worldwide operations, planning over 200 new AI use cases to transform everything from wealth management to regulatory compliance. In Spain, Santander is expanding AI tools to 185,000 employees, aiming to derive €1 billion in business value through efficiency and new growth between 2026 and 2028. Major banks are racing to recruit top AI experts. UK's Lloyds Banking Group will hire about 300 new agentic AI specialists this year, boosting its AI-focused workforce beyond 1,000 strong. Similarly, in the US, regional lenders like Associated Bank have created senior AI leadership roles to drive data-driven credit decisions and client service innovation. This flurry of initiatives underscores a common recognition. AI is no longer a niche experiment, but a mission-critical capability. Executives say it's about making finance faster, safer, and more personalized, using AI for everything from automating routine tasks to detecting fraud. In the words of one bank's data chief, integrating AI is like gaining meaningful insights that strengthen client relationships and drive growth. The industry's embrace of AI reflects a futurist, optimistic outlook, a belief that intelligent machines can augment human expertise to elevate financial services to new heights. Vintage Futures. TMCnet. Beyond AI, the next frontier in finance tech is quantum computing, a once theoretical innovation now inching toward real-world impact. Leading banks are collaborating with quantum tech firms to tackle complex financial problems previously deemed unsolvable by classical computers. In a landmark move, France's banking giant Crédit Agricole CIB and quantum computing leader Pascal have entered a strategic partnership to transform decades of research into operational deployment of quantum algorithms by 2028. Their joint projects have already demonstrated promising results in credit risk measurement and portfolio optimization, where quantum algorithms outperformed classical methods under certain conditions. As quantum hardware matures, these efforts target tangible improvements in capital allocation and risk monitoring, tasks like optimizing credit reserves and balancing risk-weighted assets in ways unimaginable with today's machines. The partnership's roadmap includes a mix of quantum-inspired algorithms running on traditional systems alongside experimental runs on actual quantum processors, with hybrid solutions bridging the gap. This quantum leap underscores the space race mentality in finance technology. Firms see quantum computing as the next giant leap to amplify computing power and propel analytics beyond current limits. Meanwhile, AI continues to push boundaries. A consortium of top UK banks and tech companies is co-designing Britain's first sovereign AI model for finance to ensure safe, cutting-edge AI that meets national standards. Collectively, these initiatives illustrate how AI and data analytics are being woven into the fabric of finance, with both caution and excitement. Industry leaders highlight the need for responsible AI governance and new risk frameworks, acknowledging that with great power comes great responsibility. But overall, the sentiment is hopeful and forward-looking. This tech revolution is seen as a chance to deliver deeper insights, better risk management, and more inclusive services, bringing the benefits of modern finance to people at every level. Vintage Futures. Subtopic: Human plus Machine Synergy. Even as algorithms proliferate, the finance sector is emphasizing a human-centered approach to AI and data innovations. Banks and financial firms know that trust and empathy remain fundamental. They are training staff to work alongside AI tools rather than be replaced by them. The vision is AI with a human touch. For example, generative AI might quickly analyze a portfolio, but a human advisor will tailor the strategy to a client's personal goals. Meanwhile, AI is making finance more accessible, powering chatbots and virtual assistants that provide 24/7 service and financial education to customers, including underserved communities. Data analytics and AI can help identify biases and inequalities. For instance, spotting patterns of unfair lending, enabling institutions to course-correct and ensure fairer treatment. As automation frees professionals from repetitive tasks, it allows them to focus on strategic decisions and client relationships, the things that algorithms can't replace. Leaders highlight the importance of ethical AI practices, investing in responsible AI roles and frameworks to ensure algorithms are transparent and do not reinforce discrimination. This symbiosis of human intelligence with AI firepower promises a new universe of financial solutions, much as a skilled crew harnessing advanced technology can venture deeper into space. In essence, the finance industry's tech revolution is not about machines versus people, but machines empowering people, aiming to foster a more innovative, efficient, and equitable financial system for the future. Vintage Futures. +1. Vintage Futures. Video description. Welcome to Enterprise Finance Daily. Banking, risk, and corporate market insights, your AI-powered daily financial news analysis. In this forward-looking episode, dated July 1st, 2026, we dive deep into 5 critical sectors shaping the future of finance with a positivist, futurist perspective. Corporate finance and banking explores the current merger mania as resilient banks leverage strong balance sheets for strategic deals, while still mindful of emerging risks in private credit and real estate. FinTech and RegTech covers the global push for crypto regulation, from the U.S. Crypto Clarity Act and new stablecoin law to Europe's MiCA crackdown on unlicensed exchanges, highlighting the tug-of-war between innovation and oversight. Risk management and insurance details how insurers are adapting to an era of mega risks, confronting climate disasters and cyber threats, and innovating with advanced analytics, cat bonds, and parametric insurance to close a staggering $424 billion protection gap. Investment and capital markets looks at the AI-driven stock market rally, with small-cap stocks hitting record gains and a headline-grabbing SpaceX IPO fueling an influx of investor capital, even as central banks weigh inflation and interest rate risks. Finally, AI and data analytics in finance reports on the tech revolution on Wall Street, where artificial intelligence, big data, and even quantum computing are being embraced to transform financial services, all while ensuring a human-centric approach. Join us for an hour-long, in-depth news report that merges hard facts and insights with a hopeful view of how technology and innovation are shaping a brighter financial future for businesses and society. Video tags: finance, banking, corporate finance, FinEc, RegTech, risk management, insurance, capital markets, investment, stock market, mergers and acquisitions, IPO, small cap rally, interest rates, Federal Reserve, inflation, fintech regulation, crypto law, stablecoins, Clarity Act, MiCA, climate risk, catastrophe insurance, reinsurance, fintech trends, AI in finance, data analytics, quantum computing, machine learning, banking technology, future of finance, space economy, SpaceX IPO, futurism, innovation, economy, market insights, enterprise news, daily financial news, business analysis, technology in finance, global markets, investor insights, space colonization, optimistic future. Base thumbnail concept: a crisp, visually striking thumbnail illustrates the financial world's new frontier. The design features a futuristic city skyline merged with a starry outer space background, symbolizing the blend of high finance and cosmic ambition. In the forefront stands a professional news anchor silhouette or figure, holding a glowing data tablet. Overhead, a stylized rocket, echoing SpaceX, soars upward alongside a stock market arrow chart that's skyrocketing, capturing the surging markets and tech-driven momentum. The text Enterprise Finance Daily is bold and sleek at the top, with the subhead AI-powered market insights below, promising a modern and authoritative tone. The overall color scheme uses deep blues and blacks for a sophisticated, space-like atmosphere, contrasted with vibrant neon accents to highlight technology and optimism. This base thumbnail conveys urgency and innovation, inviting viewers to explore tomorrow's finance news today. Thumbnail Variation A: urgency and bold headlines. Emphasize breaking news energy with bold red and black colors. The thumbnail could feature a large digital countdown timer or flashing stock ticker board behind the anchor figure, signifying urgency. The text overlays might highlight phrases like merger boom and AI market surge in large, eye-catching fonts. The color red, often associated with important news, can be used for highlights to convey timeliness and high stakes. This version appeals to viewers who respond to a sense of immediacy and adrenaline, suggesting urgent news updates and critical market shifts requiring immediate attention. Thumbnail Variation V: opportunity and optimism. Use upbeat imagery and warm tones to highlight opportunity and a hopeful future in finance. The thumbnail might show a golden sunrise over a city's financial district, symbolizing a new dawn in markets and innovation. The anchor figure could be looking optimistically upward as arrows and graphs trend skyward in the background. Keywords like record rally or new opportunities can be placed in a bright, positive font color, such as green or gold, to convey growth and wealth. This version targets viewers drawn to inspiring, positive narratives, promising insights on success stories, technological breakthroughs, and prosperous trends. Thumbnail Variation C: AI disruption and future tech. Focus on the technological revolution in finance by featuring imagery like a futuristic humanoid AI or robot interacting with financial data. The backdrop could include a network of glowing data connections or circuit patterns blending into a stock market chart, emphasizing the theme of AI-driven finance. The anchor silhouette might be half human, half digital, to illustrate synergy between humans and tech. Use cool neon blue and purple hues for a cutting-edge, sci-fi feel. Overlay text might highlight AI revolution in finance or quantum leap ahead in a modern, tech-styled font. This variation appeals to viewers excited by the disruptive potential of AI and advanced tech, promising a forward-looking exploration of how technology is transforming the financial cosmos.